Hey guys, Infidel1258 here. I want to do a video today talking about silver spot price for 2019, my predictions, my expectations, what feeds into my analysis of where I see silver going, and um, I guess by connection where I see the stock market going, because I see them as being um, negatively correlated, meaning that when one goes up, the other will go down. And so I expect, we're getting right to it. I expect silver price to go up. I expect stock prices to go down. And largely that's because of, well, there's so many factors there, and it could probably be an hour-long video with, me going down many meandering paths to kind of explain my belief in that position. But I would just point, I guess, I'll try to keep it under 10 minutes. I would point to the silver prices going up currently, and USD spot price for silver for 1 troy ounce today, January 2nd, is about $15.52. And on November 12th of 2018, which is, about a month and a half ago, it was $14 even. And so that's a 10% increase in about a month and a half, which is very significant. And that's at the same time that the major stock indices or have lost about 20% on the whole, or some stocks have lost even more than that, like Apple and Facebook and Netflix and Amazon. They've lost in some cases 30 or 40%. And so the stock market takes a beating and commodity prices go up. No surprise there. But I think what we're seeing is the unraveling of the fiat bubble that started in following the 2008 crisis, when the federal bank started printing money to save us. Print to save, I like to say. Seems to be their motto. And I think you probably, if you're watching this video, you already understand that the Federal Reserve prints money through quantitative easing and pumps it into bonds so that they can give money to the government for spending, deficit spending, but also so that they can inflate the stocks and bonds markets, which make people who are invested in those markets richer, quote unquote richer, because they've got more zeros and ones in their portfolio. And then when they have that extra value in their portfolio, they can borrow against it, they can buy more things, they can feel richer and invest in the economy. That's the theory, but of course that's not what we're seeing. We're seeing banks and the top 1% just double down on stock investments, on corporate buybacks, and playing the market because they expect more and more printed money to inflate that economy. We're not seeing a lot of structural or infrastructural commitments by the government or by private enterprise. We're not seeing a lot of new job creations. In fact, we're seeing a lot of layoffs and a lot of big businesses are closing in 2018, and I'm sure again in 2019. And so the bubble is popping, and it's largely it was completely foreseeable. Even before I knew anything about economics, I learned about the 2008 printing the printing the U.S. government did after the 2008 crisis, and I said, well, how long can that go on? And so that's me as like a 20-something guy with no economic experience or economics training or teaching. Clearly the people that are in the system must understand that that's not a sustainable model. You can only print money to inflate the economy so many times before the money that you're printing is worthless. Because when you create new money, new zeros and ones in the bank account, or new paper for people to hold on to that has dollar signs on the paper, you're not creating wealth, you're creating zeros and ones. And there's a big difference. When you create more money, but you don't have more underlying goods and services within your economy, you just have more zeros and ones chasing after the same amount of resources. So if you got, for instance, there are 10 people in your country, and there are 8 apples, and everyone needs 1 apple to eat, well, there's not enough apples for everybody. Now, in my example, if there are $8 in that economy and every apple costs $1, again, there's not enough apples and money for people to have equal access to, and satisfactory access. And so some people are going to starve and be poor. And the same is true in reality, and like in Canada and America and the world today, but on a bigger scale. And so what the governments and the central banks have tried to do to solve that problem is they've taken the $8, the original $8 that was in the economy, that was earned through hard work and labor, through ingenuity and creativeness and marketing, and they've taken that money and they've inflated it, made more of it, just through hot air. Like the in my example, what might happen, what has actually happened, within my example is there's $8 real with 10 people that had earned $8 real of wealth, and then the banks came in and they just printed two new dollars out of nowhere, that never existed before, and were backed by nothing, and were not created through ingenuity or hard work. They just were printed. And then now we've got $10 for the economy, and then banks, through fractional reserve lending, print another $100 just by lending. They lend it into creation. Like when you go to a bank and you get a mortgage, the bank lends you the money to buy that home, but really they just print it into existence by the act of lending. And they lend some zeros and ones to your account, and those zeros and ones get transferred over to the seller's account, and that money has been created instantly out of nothing. And so that's fractional reserve lending. And between the fractional reserve lending and the central banks printing, and the actual real wealth in the system, we now have $110 in my example, but we still only have the 8 original apples. So do you think that the people who own those apples are going to continue to accept $1, which was the original price for my apple in my example? Are they going to continue to accept $1 for the apple that they own when they need an apple to eat themselves? Of course not. They're going to see how much money is in the system. They're going to recognize that there's now $110 where there used to be only 8, and they're going to demand $11 or 12 or 13 or 14 or maybe even 20 per apple. And that is inflation. That's the act of when the monetary supply inflates, meaning we print more money through QE and fractional reserve lending. The price discovery mechanisms that are at work in the economy through free markets are going to influence the purchase and sell prices of goods and services, like the apple. No one's going to take $1 for an apple, just like no one's going to take, if you're in Vancouver, British Columbia, Canada, you know that like a 2-bedroom home is like $1 million. And so no one's going to take, maybe in like northern British Columbia, like Fort Nelson, which is a really small town up in northern British Columbia, maybe for 2 bedrooms there, you can buy it for $100,000. But no one's going to take $100,000 in Vancouver, BC, for a 2-bedroom apartment, because there just is too much money in the system, and there's too many people who want to move there. So therefore, the inflation of housing prices occurs. The same has always been happening ever since 2008 with stocks and bonds, because that's where the money goes when central banks print. It goes directly into stocks and bonds. And so we have seen about 10 years of steady price inflation as a result of monetary inflation in the entire world, but absolutely in Canada too. And that affects stocks, that affects bonds, that affects housing, that affects artwork. And so this is why Mike Maloney refers to this as the everything bubble, except for gold and silver, because commodity prices like gold and silver don't rocket when everyone feels secure and wealthy and they see the stock market gaining annually 10 or 20%. People move into that because there's this narrative spread by the mainstream media, which is owned by the rich 1%, that gold and silver are not good money. And of course, they are good money, but this is what the narrative says. They're not good money. They're archaic. They're relics. They're not useful today. Meanwhile, you see every major country stockpiling gold today, except for America and Canada. And so it is good money because, look, gold and silver are divisible, durable, fungible, resistant to counterfeit, and portable. And more than that, they're both mediums of exchange and stores of value. So yes, gold and silver are good money. And so we are already moving into the popping of the everything bubble. And I am expecting silver and gold to continue to rise. They've gone 10% in the last month and a half. Well, silver has. Gold has gone less. I'm expecting silver to rise more than gold. And I'm expecting the gold to silver ratio to move closer to 40 ounces of silver per ounce of gold. And watch that gold to silver ratio. If you're interested in silver pricing and investing in silver, watch that gold to silver ratio. And I'm going to begin to I'm accumulating silver now. I'm on a journey to 1,000 ounces. Follow me on Steemit and on YouTube here to watch me on my unboxing and to talk about, my journey through finance, and like and subscribe, guys. But I'm going to be moving into silver continually until that gold to silver ratio starts moving closer to 40 ounces per ounce of gold. And then I'm going to be moving toward gold with my silver, trading silver for gold, because I consider them both good money. And I think that's an angle to play, because right now silver is underappreciated in comparison to gold. And so I don't measure my wealth in fiat. And I think that's one of the things that we do that we shouldn't be, because fiat is death. It's just dead. It's hot air and it's empty. I measure my money, my value, my wealth in physical silver and eventually gold rounds. Also, I trust Bitcoin and I trust a few other cryptocurrencies as a real store of wealth. And so that's something I invest in. But wealth is more than just money, as we all know. It's family, it's friends, it's community. And so I try to foster growth in those angles of my life as well. And if you follow me here, you know I'm also a prepper. I try and prepare for food and water stores so that my family is ready, come what may. And so, guys, I'm expecting silver to go up in 2019. I think I've said in many of my videos before, I think $14 was the bottom. I don't expect silver to go lower than that, particularly because the market manipulation that exists simply can't go on, because the print to save method that the central banks implement to get us out of these market crashes, which is currently beginning to unfold now and has been unfolding since October 2018, can't be stopped by the medicine that they use. And again, that medicine is printing through quantitative easing and fractional reserve lending, because at some point those medicines lead to their own ailment, which is worse than the current ailment. And what I mean is, if we print and we print and we print, we get into hyperinflation, and then each dollar the delta dies. And this is my view where I see the US dollar going and the global economy falling as a result, because the USD is the cornerstone of the global economy. And so, long story short, I expect silver to go up a lot. I expect gold to go up a lot. I wouldn't be surprised to see $50 silver this year. But having said that, I'm in it for the long run. So I am accumulating silver monthly and on a journey to 1,000 ounces. And I'm not measuring my wealth in fiat dollars. So I'm not looking to sell my silver at $50. I'm looking to sell my silver for gold when that gold to silver ratio returns to more a historic normative state of around 40 ounces per. And in fact, I expect the silver to gold ratio to reach as good as 10 ounces of silver per ounce of gold, meaning that I will be trading my silver for gold all the way as that ratio improves and improves. And then if I was to see a 10-to-1 ratio, I would sell all my silver for gold, because I would expect that ratio to be returning back to a 40-to-1 at some point down the line. So that's both a 1-year plan and even probably a 10-year plan that I'm kind of quickly glossing over there. And I'm happy to talk more about that, guys, if you want. Please like and subscribe. Follow me here on YouTube for more content like this. I try to post every day, but If you want more content from me, you can find me on steemit.com, where I post every day. Thank you guys for your time and attention. God bless you.